Hello, this is Carolyn, and you're listening to Analyse Asia, the podcast dedicated to dissecting the pulse of business, technology, and media in Asia. Now, the topic of our today's show is the state of China and SoftBank in 2019. And our special guest is Shai Oster. Welcome, Shai.
Hi, thanks for having me.
And now, Shai is a Pulitzer Prize winning journalist who has been covering China since 1998. And he's also the Asia Bureau Chief at The Information. And of course, a longtime friend of the show. This is going to be your third time doing the year-end review with us, isn't it, Shai? This year, 2019, because you started in 2017, I believe.
Wow, I had no idea. Time flies, I suppose. Yeah. We're having fun. Are we having fun? I hope so. Okay.
Yes. And so since your last appearance on the show, what have you been up to?
Not much. It's funny. So we've been watching the cleave, the beginning of the great unwind. We've seen a wave of IPOs rise and fall and trying to keep ahead of the next development. I think this has been a year of big surprises, a lot of anxiety about the future, I think.
I agree. And we probably didn't see all of that coming. Before we jump into talking about the state of China and SoftBank for 2019, let's do a quick review what some of your predictions were a year ago in our 2018 podcast. And so if the show notes are correct, some of your 2018 predictions include that Didi is going to IPO at the end of 2019. ByteDance will continue to grow and fight Facebook in Southeast Asia, but will not IPO. And financial's path to IPO is not so clear. And then we were just wondering what will happen to Xiaomi with their overseas expansion. And the first quarter of scary growth in China will probably be followed by a wave of government stimulus in China. So what would you score yourself in the 2018 predictions that you gave?
Not miserable. Actually, let's go through. So Didi, I was wrong on Didi. Okay. Definitely that. Okay. So that -1. ByteDance, yes, right? We definitely, yes. ByteDance in India is now huge. I didn't know that that TikTok would be so big in the US. But definitely, and the fight to Facebook has really become true. At the time, it was kind of like metaphorical, and now it's not such a metaphor anymore, right? Zuckerberg called out ByteDance in recent testimony as a threat to American democracy. So that's true. And financial's path to IPO is even less clear than it was a year ago. That's actually becoming more and more of a murky mess.
Right.
Xiaomi, what happened even to their domestic growth, right? That's just been, what's that sound? I think that's the share price. That's just been it's like watching a very slow motion car crash. And then, yes, I was right.
There had another IPO though to cash out on. But yes, what was the other IPO? For the other company that he started a way long time ago, I think Jinshan.
I totally missed that. We'll go back to that one. Maybe we'll do a follow-up story. Certainly the investors, all the people who came in at Xiaomi in the last round must be not very happy. And it was interesting that he just recently, he's announced the replacement for head of China operations, China sales, the China business for Xiaomi, right? That was pretty, I think, was very mature for any executive that publicly acknowledged, I screwed up. Somebody else has to do this better. But also sort of an indication of just how things are just not going according to plan. And then the last point was the first quarter of a wave of China stimulus. Yeah, there's definitely been stimulus, right? We've seen it's been a different kind of stimulus. They've been trying to moderate it and trying to avoid a lot of the mistakes of the past. So it's been kind of a mix of allowing banks to lend more, but at the same time, letting banks fail, letting companies that had bad, like some of the bond defaults that we've seen. So it's a mix of, it's a more subtle or more nuanced approach to growth stimulus than I think we've seen in the past. But effectively, the bottom line is that they're priming the pump, rather, trying to get growth going again, especially because as trade has been, the U.S. has really taken a hit. So they need to boost that domestic spending any way they can. So I think not too bad. I
think so. And, there's no fun if you got it all right, then people will wonder, what kind of genius are you just looking into the future? But now we can talk a little bit about what has happened in all of 2019. And you already mentioned how there's a lot of tension between China, US, etc. So what are some of the few events that you feel like in 2019 has shifted the trajectory for SoftBank and for Chinese tech giants?
So Huawei, what's happened to Huawei was an earthquake to the China-US tech relationship. And the China-US tech relationship is the most important tech relationship in the world. If you look at in terms of market cap as a proxy for how much a company is valuable, literally like the world's most valuable companies in technology are American and Chinese. Right? And the relationship between the US and China and technology it's a truly, I think it's a unique relationship in that I don't think two countries have ever been so tightly wound in terms of the flow of capital and talent between the two countries as China and the US.
And they
if
seem
you
to
look
have
at
like a love and hate relationship too,
Yeah, well, now it's been getting more and more hate. But, since Deng Xiaoping, reform and opening up 30 years ago, said, basically encouraged Chinese to go overseas to study. A lot of them went overseas and stayed, and they became brilliant scientists and researchers and developers all over the U.S. And conversely, American capital came into China. You look at the first wave of China tech giants, it's all returning, right? The Haiguai, the sea turtles coming back,
right.
whether it's
And
Baidu or Sohu.
Copying a lot of the U.S. ideas.
Yeah, copying, adapting, whatever word. But also the capital that back in the 90s and even the early thousands, there was no money in China that would fund a tech startup. It just wasn't possible. The state-owned banks would lend to a private company, let alone something that's like unreal as a e-commerce website. And so it was American capital, Western capital that built Alibaba, built Baidu, built every single tech company, almost every single tech company, and certainly the biggest ones are all dependent on Western capital. Then if you look at another industry that China and the US are tightly wound, the auto industry, right? Ford, GM, all these, BMW, whatever, they're all so dependent on the China market. But there's not the flow. It's not like you go to Detroit and you see a bunch of Chinese car designers hanging out. But if you go to Silicon Valley, the Chinese presence is not window dressing. These are like highly talented, highly valued, very important computer scientists and researchers. And some of the top researchers in America are actually Chinese descent, whether it's like Li Feifei at Stanford, and she's the godmother of machine vision with her work, or Kai-Fu Lee, the cross-border guy, right? He was big in Microsoft and then Google, and then now is doing Sinovation. So it's really just this incredibly intertwined, codependent, symbiotic relationship that is now being blasted by a howitzer. Take, for example, Huawei grew into the giant that it is completely because of licensing agreements with Intel, Qualcomm, whoever else technology they were using, right? ARM, maybe even NVIDIA. I'm not sure if these NVIDIA chips, right? So, but they definitely had that, these technologies were going into their phone, right? Whether through buying the chips or licensing the chips or whatever else you have. The basic fact, it's the world's second biggest smartphone maker. It's Android. It's Google. Of course, now Android is an open platform. Anybody can download it, but they had a good relationship, right? Huawei and Google were more than just users of Android, but they actually had developed and produced some of the earlier Google phones, right? I think it was the Nexus, maybe two of them. So they had a very close relationship, a commercial relationship. Yes, Huawei was working on developing its own chips. There was a commercial impetus. Sure, it's a national pride, but really licensing the chips, the costs for the chips were very, very high. And you pay,
they foresaw the risk of, U.S. potentially.
No, they didn't. We know this from our reporting that they didn't see the risk. I mean, when they saw what happened to ZTE, they got nervous, but it was really more just about they felt that they were being gouged by Qualcomm on the IP costs.
It was a business decision. Completely.
Yeah, because what's funny about the licensing fees for chips, they're not on how much is the chip worth. They're based on the percentage of the value of the phone. So as Huawei was making it adds a lens, Qualcomm's benefiting from the Leica lens because it's the percentage of and effectively they were being double billed for the IP, and it was very frustrating. Okay, even as they were doing this and this for commercial reasons, their dependency on Android, we know from our reporting that they felt very comfortable. They never thought it would ever be at risk, that relationship, right? And it's not just about Android, it's about the whole ecosystem. I hate that word, but I'll use it in this case. The ecosystem, while I barf into a bag of apps that make the phone more than just a slab of metal and glass, right? It's the Gmail, the YouTube, some of the stuff that's blocked in China, but all the other stuff that isn't. So your photo processing software, your calendar, your whatever else it might be, your Meituan on an Android platform, or your Taobao, or frankly, even your WeChat is on an Android platform, right?
Right.
So those are the things that give value to the phone. Anyway, so when Huawei was shocked to discover that, oh, wait a second, we won't have access to Google anymore. It was devastating to them, right? They can still download the free Android operating system, but it's all the other stuff. It's all the behind the scenes infrastructure that Google controls. So something as simple as like many of the apps that are operating in the Android universe will use like Google Maps, or they'll use Google Fonts, or they'll use whatever other IT infrastructure that Google provides, and they lose access to that. So it's this whole thing, and they were really just caught off guard. Now what happened then is that moment is when China realized, like with ZTE, when that happened and the blacklist and the issues there, it was kind of like, you could see even within the Chinese media that's like, well, ZTE sort of had it coming, right? They cut a deal and they broke the agreement. So, like, you're just being stupid. The reaction within China was not one of fairly moderate reaction, not like, oh, America, hegemonic power is trying to contain China. With the Huawei thing, and of course with arresting the founder's daughter in Canada.
Right. That's right.
I had senior investors, so they're ethnic Chinese, who represented Western money, who were like, literally, one guy called me up and said, this is war. and he wasn't kidding. This is a guy who represented, like, and one was in charge of like billions of dollars in portfolio, and he's like, and that portfolio was all American money, right? So he was representing for years the American interests.
Yes.
But he's like, no, this is war. And it's true in a sense that, like, China has realized that, holy moly, we have this insane dependence on American tech.
That's right.
We're completely vulnerable. Trump is volatile. They don't know what's going to come next.
That's right.
And even if there's a deal and Huawei is allowed to have this technology and all these blacklists and restrictions are unwound, it doesn't matter. Like, China knows the path has been set. Right. China has to be self-reliant.
And yeah, I was Googling Huawei, and one of the first hits that came up was their new phone, the Mate 30, is made with no US components. It seems like they are trying to cope with the whole, trade ban and everything that's forcing them not to use any US content. So what do you think? How do you think Huawei has been coping, with all these challenges that they've faced this year? They are also suing the government for the FCC ban as well. So they're, always in the news and everything.
The domestic market doesn't matter, right? Domestic market didn't have access to this whole universe of Google apps other than the Android operating system. The rest of it didn't matter. So within China, they're doing very well, right? Their market share has grown. It's now like very Aigua, very nationalistic to buy the latest Huawei. Throw your iPhone into the toilet or whatever it might be.
When I was in Xiamen earlier this year, the driver was asking me what type of phone I use, and I said an iPhone. He's like, I should throw you out of the window, or the phone out of the window right now. You should get a Huawei. Yeah, I hear messages like that.
Right, but Huawei their goals earlier this year were to have huge. They wanted to double their phone business, I think from 100 billion to 200 billion USD sales a year, or was it 50 to 100? Anyway, huge numbers. That's just not going to happen, right? Like, buying a Huawei phone outside of China doesn't make a lot of sense right now.
To be honest, some of my Chinese domestic friends, because they want to be able to use VPN. And if you just bought a Huawei phone that's from inside of China, you can't even configure your VPN. So then I had friends who bought it and then end up returning it because they're like, well, I can't go on Instagram or Facebook or any of these other apps that I need to use.
Interesting. Right. And then, yes, that's a tiny, tiny fraction of the market, right? People who are that sophisticated. So Huawei, and then like they launched, we have an operating system. It's like, well, that's not the issue, because within China, you have Android anyway. So why create your own operating system? What you need is and all the app developers to come on board, right? Yeah, and within China, they don't need to leave Android because there's like thousands and thousands of developers. It's like you'd have to like start enticing everybody with like paying more money or whatever. It's overseas, and that's still like, from the reporting of my colleague Juro Osawa, that is the problem. We just actually wrote, it was like the issue was like the Google services. It's like they keep discovering more and more just how dependent they've become on Google, and they're just grappling with it. And the fact that they keep trying to push in the US with these lawsuits, like If they didn't care, they would just walk away and
That's
just,
right.
but they keep going back. And then Ren Zhengfei is like $1 short. All of a sudden, like, he comes to the seclusion. He's now coffee with Ren Zhengfei. Literally, like, it's almost like between two ferns. I'm expecting, what's his name? The comedian, Zach, to come and interview him as well. It's just, I'm sort of confused by why all of a sudden now he's like willing to talk to every random blogger, where for 20 years he was like Mr. Mystery. It's like, too late, buddy. Like, you guys should have been glad-handing congressmen and women from decades ago, right? Like, it's just like, what's the point? At this point, just double down on being seclusive and reclusive. So I don't know. I'm confused.
And I know that recently, I think it was, in the news just a few days ago, that they started another lawsuit against the FCC for the FCC ban that bars the use of, government fund or U.S. government fund to purchase telecom equipment from Huawei. So what do you think holds for the future of 5G for Huawei in the U.S. or across the world?
I think I follow the headlines and I'm very confused. So 5G matters because it's not about the phones really, but it's about all the other junk that we're going to have that will start talking to us, telling us to buy things. So our lives will become miserable once the refrigerator is like, I think you need to buy more milk. Or like, really, do we really need more nagging in our lives? But that's essentially what's going to happen. We'll be surrounded by devices demanding that we spend money.
Or we'll have, faster internet. I saw you share the funny story on your Twitter about how a Chinese visitor to the US recently was like thought to be missing because her signal service when she was roaming in the US was so terrible that none of her family and friends could reach her for 2 days. And so they actually reported her missing to the police. And then she went back to China and was like, I went to the US, but their signal service is terrible. But don't worry, guys, I'm actually back now.
Yeah, I don't know that 5G will solve that, right? Because in the US, it's a balkanized network, right? So there's no one national network, and we also have rules about where you can put cell towers. And so that I don't think 5G is faster. I don't know that I don't know the technical aspect of its coverage, if it's going to provide better coverage. Gotcha. So you'll just be lost faster. I don't know. But definitely, like, you see the debate in Europe, right? So the battleground is in Europe right now. And I'm so confused by what's going on there. I think they haven't been able to figure it out either, right? Like in Germany, it seems to be one day, yes, we're going to allow it in. And then one second day, no, we're not going to let Huawei in. The same is true with Britain, in the UK. It seems to be flip-flopping back and forth on how they feel. Same for Australia. So I think this debate is not as far from settled. So when it comes to building infrastructure, I'm curious to see how this will play out, because the first wave of major infrastructure, particularly in the US, broadband, all the major companies that built broadband ended up, which was heavy capital expenditure, went bust because they couldn't immediately monetize that infrastructure, right? But without broadband and all these cables that were laid across the world, really, all of our data-heavy apps like Netflix, or frankly, Uber or Meituan or all these other services wouldn't have existed. In China, the cost of the infrastructure was effectively borne by the state, right? The state-owned telecom providers, you could argue, subsidize the Alibabas of the world by bearing the cost of the infrastructure. I know with 5G, the telecoms are like, they're nervous, right? Because they saw what happened with the previous generation of like the big leap, the costly expenditures in broadband, and really those companies went bankrupt. And so they want to have a piece of the service. They want to figure out, like, they don't want to just like lay the pipes and then go broke while somebody else makes money off the water that runs through the pipes. They want a piece of the action. And so it's a question of like, so Huawei, I guess, is going to make lots of money because it's the service, it's the one selling the equipment, then maybe it's the network, the local telecom companies, mobile networks that will bear the cost and are hoping to like earn back the money from all these data fees that we're going to be paying. But I still think everyone's sort of embracing this, but I wonder if there's really if the economics of it have been clearly thought through, because it was such a disaster in the last big leap of internet infrastructure. I don't know. This is a battle that's going to be fought across Europe and Southeast Asia and India in America, of course, we're just going to end up with a faster but just as spotty coverage.
I'm pretty excited to go back to China and maybe sign up for their 5G plans because it's.
But what are you going to watch on it? What are you going to get that's going to be so much better? Oh, look, my censorship is now even more instant.
Yes, I'm going to go on Bilibili and the other Chinese domestic video sites instead of.
But okay, so like if you like, Qing Dynasty convoluted romance.
I just want to say, though, this is definitely not allowed, but a lot of Netflix shows are actually been what they call 搬运, or they've been carried over by someone to the Chinese sites. Just saying.
Oh, interesting.
Like I was watching Terrace House, which is this Japanese reality TV show that's produced by Netflix, but I was watching that on Bilibili, which is the Chinese video site. But yes.
Interesting. Do they have a licensing agreement, or is it really like Baoban?
This is definitely not allowed. Netflix should take them down. I mean, we'll see if they actually, do all of that. But yeah, no, they don't. They definitely don't have a license.
Because I know Netflix had cut some deals in China with, who were they doing?
But no, these are individuals, individual accounts.
That seems complicated.
Yeah, a lot of people do that actually. They take a bunch of shows and then they just make it available on these Chinese platforms. I don't know how they make the money, but yeah. So we talked about Huawei as one of the major events for 2019. What else?
Well, the trade war, obviously, which is a broader, all the broader implications. And so now, it's not just Huawei and the rethinking of this relationship, but now I think the other big thing was TikTok. I think this is the first time that a Chinese tech company has gone global. Yes, Huawei's sort of gone global. Alibaba has investments all over the world. Tencent, through its ownership of Supercell and Riot Games, is the world's biggest games publisher. But TikTok is truly like a Chinese thing that has gone global.
So then now the question here to ask is, because we just talked about Huawei, do you think TikTok, or ByteDance as the company who owns TikTok, is going to end up in the same predicament similar to Huawei? Being antagonized by the U.S. and
Heck yes. Oh yeah.
Yeah, no doubt about it. Eh?
That was very Canadian, by the way.
The A.
Yeah, and the about. They're in a tough spot.
And they're
how ironic that that they've reached Pacific Ocean and landed on American shores and they've truly gone viral in America. It's like mothers are embracing TikTok. It's just huge, huge, huge. And Congress is like, kill it. What lousy timing for Jiang Yimin.
That's right. Yeah, that's right. They're also getting pushbacks in other places, for example, like in India.
In India, they've sort of worked it out in India, I think. They were briefly banned and then the ban was lifted. They've really done a lot of work. They've hired very good locals. That's really interesting. So ByteDance has hired a lot of locals. I don't know. There's a question of how much autonomy they have in making decisions, but they haven't parachuted Chinese. I guess they've learned from the mistakes of American companies in China, where it was like, you had Americans trying to figure out how, the eBays and Amazons of the world. That you can blame the Great Firewall for a lot. You can't blame it for everything. There was just a lot of missteps and misunderstanding of the local market. And I think Chinese companies and entrepreneurs are keenly aware of that history. And so, if you look at the hires that TikTok and ByteDance have made in the US, they've really gone after they poached top talent from Facebook and Google and Snap. And so they've tried, and in India as well, they've really hired highly skilled locals. And so in India, they've done okay. They're pretty entrenched. I don't think they're at risk. But India doesn't matter. That's the funny thing. India is a great number to show, but it doesn't give you anything that. You can't make any money off of it.
Right. The advertising dollars won't be able to match up, to the US.
Yeah. So it's a great growth story for an IPO. Yeah. But it's not a business.
So then do you think that means that their overseas growth potential for the company is then at risk because of the pushback they're facing in America?
Yes. I don't see a way out for them. I don't see how TikTok in the US survive? I honestly don't know. I mean, like, if the Grindr deal had to be unwound because of security concerns, and that's a fairly niche app. TikTok, which has like the precious bodily fluid, sorry, the movie reference, but it has all of this data about our youngest and most, and I'm playing devil's advocate, like the most vulnerable people in our society, and it's going to the Chinese, like the boogeyman. But like the sad reality is that if you're a company in China, you kind of operate the same way in the same environment as an American company. You really, like, we've seen this happen where like the top CEO of a Chinese company vanishes for a while. Take Fosun, for example. I don't know how to pronounce it in English. Fosun? Remember when the CEO vanished for a couple of weeks, I think, to answer some questions. If the Chinese government and the Communist Party want something from you and you're in China, it's not like, oh, due process. There ain't no due process. That's the blunt reality. And so some of the concerns are very hard to address. It's like, they can say as much as they want, like, oh, well, the servers are in the US and the backup is in Singapore, and we have no control. And it's just like, yeah, but like, if you're Shuangui, if you're put under, double detention, you have no way to say, all this talk about like, we would never share if the Chinese government, even if they ask, like, seriously? Like, it's the sad reality. Like, and frankly, like, things are getting tougher in China. Like, right. The environment is getting tighter and tighter and tighter. I'm not suggesting that TikTok is in any way a nefarious plot. I believe that, as far as I can tell, like, they're genuine. These are all genuine people with really do care. Like the missteps that they've made with, like, censoring. They took down that Uyghur, the woman who was using that hilarious trope of the makeup tutorial, the eyelash tutorial, in order to talk about repression in Xinjiang. They backtracked pretty quickly, and it seems their argument that plausible. I'll take them at face value, but like the fact is that, like, at some point, like, if somebody in Beijing calls them up and says, we're seeing a little too much stuff about Xinjiang on your platform, take it down overseas, how are they going to say no? Like, right. How? Because at any moment, China can say, like, oh, yeah, you're Jinru Totia, shut it down.
Right,
and
like
there's no recourse.
Yeah,
at any moment, like, oh, this is counter to, this is spiritual pollution. What are you going to do? Sue them in the court?
Of course not.
Right? Like, what? You have no recourse. So they exist at the whim. And it's not like them in particular, but like private enterprise exists at the whim and is at the mercy of the Communist Party in China. That's the truth.
And we talked a little bit about, overseas expansions for these Chinese tech giants like ByteDance. So do you think they'll have to just focus on other areas of the world, maybe Southeast Asia, India, Europe, etc., instead of trying to put a foothold in the US?
So clearly Southeast Asia is where they've made a big effort. They might be making some money there, but it's not going to move the needle substantially, right? It's cheap to acquire users in Southeast Asia, and you make a little bit of money. But if you want real advertising dollars, it's the US. Europe, they run into the same problems that they run in the US about like privacy and censorship and control. So I think that's what it is. Within China, it's the growth is spectacular. Even as some of the apps might be slowing down in terms of like new user acquisition or user growth, the migration or the flood of digital ad dollars off of Baidu and other platforms onto the ByteDance universe of apps is phenomenal. I mean, they are just like printing money, right? They have so much cash coming in just from China, really. Almost all their revenue now is domestic. Then that's fine, right? I think like probably my guess is I'm going to make a prediction is that by the end of next year, they will have greatly reduced their ambitions or scaled back their global ambitions and just double down and renew their focus on China. And maybe they'll like keep trying to grow like long term, India will eventually be a market and start doing stuff maybe in Africa. If I'm going to make one prediction is that TikTok will retreat from the US.
I'm just, noting it down and holding you accountable next year when we talk.
Okay.
Well, we also mentioned just a little bit about IPO. So let's talk a little bit about, the public market for Chinese tech startups. So Alibaba just popped onto the Hong Kong Stock Exchange, after Xiaomi and then Meituan Dianping. Do you think that the Hong Kong Stock Exchange will become the Chinese tech startups port call for IPO?
So it depends a lot on the Hong Kong Exchange as well. I think the dual share structure is still sort of provisional, but it's definitely, I think, what the apparent success of Alibaba is very appealing. And so I think, and of course, the less welcome reception in the US is definitely going to make Hong Kong a much more appealing place for Chinese tech companies. And what's interesting is despite like 6 months of protest and unrest in the streets of Hong Kong, the stock market has been very resilient. And then so take a look at like Meituan, right? Meituan has, its IPO was kind of underwhelming. Its share price at its lowest point was something like 40 Hong Kong dollars. And it is now trading, it's doubled, right? It's trading well above its IPO price. It's kind of steadily been growing despite like 6 months of craziness on the streets. And again, also the Alibaba IPO happened in a pretty challenging time. So definitely, I think Hong Kong will become more and more appealing as they allow, in particular, like people are concerned about the dual class structure that allows founders to, even though if their shareholding might be diluted, but they still basically allows founders to retain control over their companies after listing.
But it doesn't seem like, the chaos in Hong Kong is going to stop in the next, weeks or even months. And now we see investors moving their assets away from Hong Kong to other places, like, for example, Singapore. Right? Do you maybe foresee that Hong Kong or HKSE will lose its position as like a financial hub? And what would that mean for the Chinese tech giants?
So I don't see that happening anytime soon. It's hard to move liquidity, right? So you don't need to have, I've seen this, like the fact is that like none of the big banks are leaving Hong Kong. Like it hasn't gotten to the point where Goldman Sachs is scaling back its operations here or JP Morgan. None of these guys, they all have contingency plans, but no one's actually doing anything. In fact, it seems to have gotten, like, I think there's a feeling that like, okay, well, it'll never be back to like a ridiculously placid place it used to be. There's an acceptable level of volatileness,
Do you think there are other long-term implications and effects to business and tech companies as a result of these protests, though? Because you live in Hong Kong.
No, that's the weird thing, right? Like trade is going to trade, and they're like, it took me a little while to get into work today, but like, let's go make some money. It just hasn't had so some hedge funds or some if it's a 10-year fund, I've heard some people are setting up the fund in Singapore instead of in Hong Kong. But the money's fungible. Right? The fact that your piece of paper is in Cayman Islands or in Singapore, you can still buy and sell on the Hong Kong Stock Exchange. Right? Like the exchange itself is like something in the air. It's all digital, right? So it doesn't kind of matter where the money is, the contracts are signed or your digital dollars are located. The exchange itself is still going to be, it's taken a while to get to this size, and that liquidity is what people need. I don't think that's having an impact yet. If anything, having it another place where you can get viable exits is good, right? So it's not just having to tell the story to US investors, and it's a story that US investors may not understand because the story's in Chinese. Maybe it's but then again, like Hong Kong investors, it's a weird market, right? Because it's a lot of retail investors here. They're not buy and hold. They're sort of rumor driven in and out. They can be sometimes more skeptical. Yeah, more speculative, more skeptical. But then also, like the thing that's going to make Hong Kong ultimately very attractive to Chinese companies is the Hong Kong is the connect, right? The connection to the mainland markets. And so Alibaba, like I can't buy tech stocks because of conflict of interest and ethics. Yep. But if I had money, so that's the only thing, I don't have any money. But if I wasn't bound by ethics laws and had money to spare, I would totally buy Alibaba. Because at some point, like a couple of things are going to happen. There's these massive index funds, right? So at some point, Alibaba becomes part of the index. And that's just automatically like all of these passive funds have to allocate share to every company in the index. So that's a huge boost to our share price. Mm-hmm. Secondly, I've been reading that. So it's not like a universal, like all stocks on the Hong Kong exchange are available for Chinese buyers. But Alibaba is probably going to be one of these, right? And like, if I'm a mainland investor and I can get a piece of Ali, heck yeah, right? And so that's going to bump up, right? Like, it's the access to the pent up demand in China for actually real functioning companies, right? Because the fact is that the companies listed on Chinese stock markets, are an excrement show, right? It's just not, there's not a lot of quality listed on the mainland, right? And
Actually,
so,
I tried
go ahead.
to move money. I tried to purchase some stocks on the Hong Kong Stock Exchange, and then I went to a Chinese bank, and they told me that I could not exchange any money unless it is for studying abroad or for traveling purposes. And especially, I was not allowed to exchange my money into Hong Kong dollars for investment purposes. Actually,
Right. Well, isn't that a crime? This is one of the great ironies of the Chinese tech
crazy.
boom, is that the Chinese can't benefit from it.
So
It's
there
like
are
the best performing stocks,
yeah.
Tencent, Ali, like the Chinese people made these companies happen, right? Like their spending is what's powering them. Like they should be able to get a little action, get a little upside.
Yeah, I mean, I spent a lot of money on Double 11 this month. You should let
Hmm.
me buy some Alibaba.
Exactly.
It's unfortunate.
So yeah, so I think that moment, so that, Hong Kong still has that, right? It's the one that's going to have that connection. Singapore has really just always been more about commodities, oil trading, that kind of stuff. It's not, I don't think it has, it may be like longer term, but I just haven't seen any indication yet of like the big bank saying it's time to move. And the unrest seems to just become background noise a little bit.
Yeah, I heard similar things from some of my banker friends who work in Hong Kong. They're like, yeah, we still go to work, but maybe you shouldn't come visit, on a weekend. And please don't wear black, kind of
Right.
comments. Yeah. And we've talked a lot about China and Hong Kong, and then which is part of China. And let's talk a little bit more about SoftBank. We all know that WeWork is not what it used to be. Do you think that Vision Fund 1 has reached its peak with the collapse of WeWork?
Yes. So I feel really stupid because when WeWork was first launched, we wrote a bunch of stories where we're like, we don't get it. This seems really speculative and like a house of cards, and we just didn't get it. And we were trying to like see like, well, maybe Masa sees something we don't understand, but like you're setting up the world's biggest VC fund, but you're acting like, but a big chunk of it's going to act like a bond with a fixed coupon. Like we just didn't understand it. It turns out that maybe we weren't so stupid after all. Like
Yeah.
I felt like the naked boy, the little boy pointing at the emperor's naked, like everyone else was like, oh, the emperor, he's not naked. And I'm like, but I can see his tushy. He's a genius, right? The guy's a genius, right?
Yes.
Hands down, right? Okay,
Yes.
fine. His biggest bets were much, much smaller bets. Like the Alibaba bet was like, a couple $1 million. And yes, these are like 10 years, 20 years, whenever his initial investment was, those dollars were worth more, but they weren't like orders of magnitude. It wasn't like $500 million bets, $2 billion bets, right? It's just like, those are private equity bets, and private equity functions in a different way. And like, we would hear internally that like, it was just chaos, and like the due diligence was like bananas, and people who were dealing with SoftBank, everyone was just scratching their heads like, what is this guy doing? The basic premise of that, like, I would bury you with my money. It turns out that like the Cyndi Lauper says money changes everything, but it also makes people, when you're flooded with cash, you could make a lot of stupid decisions. Money doesn't solve everything. More money, more problems. I'm going to quote every bad song I can think of, but like, and these are not genius insights, right? It's kind of like deploying huge amounts of capital in a short amount of time is really hard. It's not a given that every decision you make is going to be a good one just because you have $1 billion in the bank account. You've seen WeWork was just like, again, here's another example of a company that when I was, people explain it to me, I kind of looking at them, I'm like, I don't get it. So I have a long-term liability with short-term, I'm going to sign like a 20-year lease that I'm going to pay off with like people who are renting at 6-month rentals or shorter increments. Like that's just not going to work, right? And it's like, the startups are cyclical, and like it's like a love hotel for business, basically, right? Like it's like
the decor is much better than a love hotel.
Yeah, or it's like Mongkok, like the subdivided flats, right? I'm like you're basically becoming a slumlord for the grinding startup generation, right? And it's like, and then like frankly, WeWork offices are like, that metaphor of the rat race is even worse because of the glass walls thing they're really into. I always feel like I'm a gerbil in one of those like transparent cages with the pipes running between them. Like, where's the wheel for me to like, oh look, and like they should do the beer kegs in the same bottles they put in hamster cages, just to take the metaphor there. But it was just like, okay, yeah, and it's like, this is a real estate company, right? Like, I don't get it, right? Guess what? It is in fact a real estate company. It was just bizarre. The whole thing, just like, I didn't get it. The other thing that's crazy about it is that it was like predicated, and again, like, I was also like, well, wait, so SoftBank is buying stuff and then it's selling it to the Vision Fund at a higher valuation? How does that work? And I was like, do I not understand something? Because the SoftBank doesn't lie. It's a very honest, like, they're very honest about what they do, right? To their credit, like, it's complicated stuff, but if you spend the time, it's like, it's all there. There's nothing hidden about it. There's nothing devious, right? It's very transparent. But it's kind of like, these rounds where, and this is like a broader issue with private markets, is that like, oh, we're worth $10 billion according to 4 investors. Like, it's not like a public market where there's like actually a consensus and like lots like real liquidity, and so the price is sort of somehow more validated. But when it's a private market, like, who has the incentive? Like, you can't short a private company, right? I guess I'm sure somebody could figure it out, but like, there's not a lot of people who are going to say like, I'm one of the 4 investors in this company, and I think this company is actually worth 1/10 of what it is, right? There's never. The incentive is to like, no, this is a stinky potato, but like, let's pass it on to somebody else.
Right, that's right. Do you think SoftBank is going to be able to raise like a second vision fund in 2020?
I mean, like, so they say they're working on it. A big chunk of it this time is going to be SoftBank's own money. The company itself is telling its employees to borrow money to invest in the fund.
Wow.
Some of the stuff, it was a little fast and loose when it said like, oh, we have commitments from other investors, and the other investors were like, we didn't commit. We just signed an NDA so that we could actually look at the fund, but we haven't put any money in yet. I'm very skeptical about it. I really feel, the Saudis, once the Saudis back away, who's going to step in with a $45 billion check, right? Especially like Uber's not doing so well.
So yes, Uber has not performed very well with their IPO. And then we also see, Wework failed to even go public. So do you think that has really changed the public market's perception of these startup unicorns?
Yes. The story was, look, Amazon wasn't profitable, but it's growing, but it's different. Amazon was not subsidizing the businesses in the same way. It was investing in growth as opposed to buying its dollars, right? Like, there are businesses where there is really a network effect. And I'd argue that I don't quite get the network effect in transportation, in Uber, right? It's not that, like, if you look at taxis traditionally, it's a local business. Right. The fact that I have a taxi service in New York City doesn't necessarily give me economies of scale to operate a taxi service in another city. Perhaps maybe I have more purchasing power for the fleet, but then Uber doesn't buy the fleets. So where does the scale come in? Like, I don't get it. Like, I once actually asked Uber executives, I was like, why do you need to be international? And they were like, oh, international traveler. I'm like, that's like what, 1% of the business? Like, I just didn't. Like they couldn't answer. Like, again, I feel like I'm like, Tamper's naked, right? Like, oh, okay. It's interesting because there is a lot of exuberance in the U.S. stock market, right? But there's also people sort of saying, hey, wait a second, right? It was this weird thing where like the private markets were like growing and growing and growing, and everyone's like, oh, the real, like the private equity guys, they're geniuses, right? Because they're like seeing this huge upside, and these companies are staying private for longer and longer and longer, and it turns out that maybe they were staying private for longer and longer and longer because going public they'd have to reveal all this stuff and be held up to a level of scrutiny, right? And there was also, especially in Asia, there was this feeling like people would kind of joke about like, we're going to dump it on the dumb money, right? Because, oh, these are just like, I'm the VC, I'm the PE, I'm an expert, I really understand, I'm in the trenches, I like them. And then like, these guys who are just looking at Excel spreadsheets, they're just the dumb money and they'll just buy whatever. It's like, they're like, yeah, we do just look at a spreadsheet, but it's like, I need to see cash flow, right?
Maybe that's why Didi hasn't gone public yet. Maybe that's why
Didi's, prediction. I mean, Didi, like, right. Didi got like the murders, right? That was like complete. Having people killed on your cars is not a good look for any company. Now, granted, particularly gruesome murders, no less, right? Really, just awful. And to its credit, Didi kind of buckled down. I mean, they also had no choice because, again, like the Communist Party was on them like white on rice, right? Like they had like committees within the company, like going over them with a fine-tooth comb. And so they really had to knuckle down. This was not the time to be talking about an IPO, right? So that's definitely one thing to take into account for why their plans changed. And granted, it's not as if that like Uber doesn't have acts of violence committed by its drivers or to its passengers. But I think in China, the risk is that, like, I think as a percentage of the market, I think Didi's probably bigger than Uber in the US in terms of like ride hailing / all transportation.
Mm-hmm.
I think because far more Americans drive themselves, right? Like than in China. Like, I think what was the number I'd seen was that like in the US, in China, car penetration is like, 2 out of 10 people. But like ride hailing is like 9 out of 10 people have used it. So almost everybody uses ride hailing in China, whereas I think in the US, it's still a very much limited to certain urban centers, probably not even every city in the US. So its impact is much visibility, its impact is much higher. Also, the expectations are, frankly, like China is broadly speaking a safer place than the US.
Yes,
they kind of don't have mass shootings. You know what I mean? Like
because we're not allowed to own guns in China.
And amen to that, because I can only, because frankly, right now
there's also surveillance everywhere, so that kind of helps.
Right, and yeah, and then you take the good with the bad. Like among the most top 10 surveilled cities in the world is London.
Huh? I didn't know that.
I think they're not as competent in handling the data. Surveillance is actually big in Europe as well, but. So within the context of a place where violence is still, murder is still kind of has a higher shock value, those things really stood out. And Didi has lots of cash, still coming in. I think their challenge is going to be like they have to list in the US or overseas. I didn't know this, but in Hong Kong for a long time, there were also listing requirements that you be profitable. You had to like get a waiver to list if you weren't profitable, similar to how in the mainland, where you have to show profit to list in mainland markets, I think except for the new star market or whatever. But broadly speaking, to list in China, you also have to show profit for a certain amount of time. Whereas in the US, we're like, oh, you want to list your hot dog? As long as you disclose that you're listing shares in a hot dog, it's buyer beware, right?
Yes.
So no, literally, you can list anything in the US. That's and if people want to, if you can convince somebody to underwrite it and somebody to buy shares, then good on you. In the UK, you can list what's called the blank check company, where it's just like, hi, we're 10 people, we've done things in the past, we'd like to raise money to do something in the future. It's like, okay, you got great. So Didi, because it's still not, I think broadly speaking, it's still losing money. I don't think it's profitable as a whole, from what I understand. I mean, obviously they don't disclose this, so Who knows? But they'd likely have to list in the US. And the problem is, if they list in the US and their comparables are listed in Uber, people are going to be like, well, Right. And then especially in China, where it's still like, so you're facing a lot of regulation, you're having problems increasing your fleet because, the
local,
like
transportation.
Yeah, so it's like the growth story there is not a great one. So I don't know. I think next year is going to be a make or break for Didi.
So let's talk about next year. What are some of your predictions for 2020, a new decade, and what are some of the key things that you're going to be watching out for? I'm
going to be watching out for increased hair loss and joint pain. No, it's going to be the U.S.-China relationship and the trade war. Will it get worse? Will it get better? If it gets worse, how does China retaliate? Is Apple going to be threatened in China? Mm-hmm. Will its businesses be under assault? What about production? What about cross-border collaboration and everything from R&D labs to research in universities? I mean, this is really just not going to go away. And if it gets worse, how does this play out? That's definitely, I think, the biggest. And I can't predict on this one because it's Trump is to be impeached. Like, what the heck? I know. Like this is the thing, is like the uncertainty for next year is bananas.
That's right.
It's just crazy. Like the other big question then is Chinese economy. Chinese economy it's growing at a ridiculous pace still, 5.9%. Like, and it's not a small country anymore, right? Like, yes, 5 years ago it was growing at like 15% or whatever, 12% at a lower base. Now it's one of the largest economies in the world and still growing at this blistering pace. But it is the slowest growth in decades. There are no indications that it's going to turn around. I think the pace will continue to slow down. I also think that we don't really see the full extent of the pain. I think there's actually, it's not across the country, but there are parts of China that from what I understand are already in a recession.
Yes,
and you can see
have
that.
Heard that actually.
Yeah, it's like in the U.S. Like you could be Rust Belt, right? So it's like it's the way you could have a boom in San Francisco, but a bust in Detroit. But I think the trade war is inflicting damage on the most important and dynamic part of the Chinese economy, which is the private sector. Mm-hmm. And I don't think we fully understand the extent to which the private sector is leveraged throughout the system, because these guys, all these guys are borrowing money left, right, and center, and they're dumping that money into everything from venture capital to stock markets to real estate. And as they start feeling pain, every dollar they make is leveraged 10, 20 times is my guess. Once they start defaulting, I just don't know that we understand the full extent of that impact on the economy, because they are the most dynamic, the part that delivers the most jobs and growth, right? Who knows what's going to go on with the Chinese economy? Now, it's interesting to see that so far companies like Ali and JD have weathered the slowdown handsomely. Will they continue to be able to grow? I mean, is what's going to happen that inefficient brick and mortar businesses will increasingly go online, where margins are greater and your efficiencies are better, and so you can still make a good buck? I don't know. Pinduoduo is telling a different story, right? Is that just Pinduoduo's operations were not as sophisticated or as attuned to the changing economy? I don't know. So definitely, the other big thing to watch out for is the slowing economy. Now, granted, Chinese government still has this massive firepower in terms of its ability to issue stimulus, but I think they're also nervous about rising levels of debt. How long can they keep, because it's no longer just national debt, it's also household debt is getting really high. And at some point, they get nervous, right? I think there's a nervousness in China about their options. And I think that's why they're continuing these embarrassing, constant rounds of trade negotiations, which I think from Chinese perspective are humiliating.
Yes.
Right? Right. It's just like 丢面子, right? And Liu He, he's he's a smart guy. He is a rock star. And having to go cap in hand back to these, bozos in DC, where he thinks he's talking to one guy, but then Trump tweets something else. I think that's an indication of how nervous the regime is about the stability of the economy. Okay, so that's another thing. What's going to be with the growth?
Earlier, you already gave a prediction. You said that you think TikTok is going to scale back and renew its focus in China, and then maybe look into focusing more on India and maybe Africa. But for sure, you think that they're going to retreat from the U.S.
Yeah, I think it's going to take them a while. I think it's going to be maybe around October, but I think they're going to be
giving a specific month. I like it.
Yeah, because elections, it's going to become an election topic.
Gotcha.
I think the closer we get to the elections, the more the TikTok will become a scapegoat and punching bag.
What about for any other Chinese company? Any predictions for Huawei or any other Chinese tech giant?
So Huawei's going to get a temporary reprieve. It's going to get licenses to continue using key technology and infrastructure from the U.S. because those companies are lobbying like crazy right now to get these exemptions.
Money. Yeah,
no, it's a huge market, right? And Trump needs the U.S. economy to keep humming, right? So quietly, all these companies will be allowed to keep selling the Huawei.
Right.
So what that does is that buys all China needs is 2 to 3 years. And then at least on the hardware side, they might be able to do it all by themselves. I don't know that how long it takes to replace a Google Play ecosystem of apps and services, but they're going to be working overtime to do that. And maybe in growth emerging markets like Africa and Southeast Asia, they can win. So that's what I think is going to happen for Huawei. I think the vanishing of SoftBank's billions is going to ripple all over the world. That was SoftBank became the dumb money of the markets, right? It was sort of, people were like, oh, we'll sell to SoftBank, right? And all these valuations kind of went up because of SoftBank. And I think as increasingly people grow skeptical or nervous that SoftBank's not going to be able to replicate its $100 billion spending spree, you're going to see valuations falling or not rising at the same ridiculous way all over the world, in particular in this region, where I think, we saw things like Oyo, which I'm just also super, super skeptical of that valuation. It's just when the founder borrows $2 billion, that's guaranteed by, I believe I read in the Wall Street Journal, the loan is guaranteed by Masa. That just seems what? and then like what's going on in Southeast Asia with Grab and Gojek without the big paychecks, and again for like Didi, Didi also had a huge paycheck from SoftBank, and if SoftBank is looking at them and saying like, I need you to start delivering, right? Like there's going to be massive shift, from as SoftBank's strategy shifts from like just grow, demolish them with your growth to like, I need to see some ROI kids. So that's going to be having a huge impact on the way all startups act in the region. What else do I think is going to be happening? Broadly speaking, the shift of money, basically because of the Cold War or the potential for a cold tech war between the US and China, and last year and the year before, a record amounts of capital were raised for investing in China. And that's become just very, very complicated, especially like things that look like they were plain vanilla investments, like artificial intelligence, have suddenly become explosive. Like, oh my God, your facial recognition is used in Sinja. US pension funds are suddenly saying like, oh, crud, like what the heck? So India and Southeast Asia are going to be the recipients of massive amounts of interest and capital, both from the money that was raised, from Western capital, but also Chinese investors, because like China is a tough market. There's a slowdown, right? It's going to be harder and harder to find. You can see already like VC investment in China is really falling off a cliff. The investments are just concentrated in a couple of mega deals. No one's risking. But in Southeast Asia and India, there's a lot of people see a lot of potential. And yes, in the short term, we did one of the most interesting stories I did was we compared like ad revenue, because basically the internet, the real money in the internet is ads, right? That's what powers the digital advertising.
That's right.
So it turns out that India, although India has the world's second biggest online community after China, but China went online as it got richer, right? People were able to afford smartphones and internet access as their incomes rose. In India, what's happened, the smartphone revolution has happened not because incomes have risen, but because data and smartphones have become super cheap. So the average user in India isn't worth a lot. Even though they're like 400 million, 500 million, I think you have about 500 million internet users in India. The total for ad revenue in India is less than it is in Southeast Asia. And that makes sense when you think about it. So you're actually just comparing. So really, you're not comparing countries, you're comparing a bunch of cities.
Right.
So in India, it might be New Delhi, Bangalore, I don't know, a couple other places. And in Southeast Asia, you're really looking at KL, Jakarta, Saigon, Manila, Bangkok, where else? A couple other cities. And that's really what you're looking at. And so in Singapore, and so you're comparing GDP per capita in those cities. Southeast Asia per capita, I think, is richer. Indonesia, but VC, so the short term, that's the reality. And it looks like the digital dollar, the digital ad revenue will still be stronger in Southeast Asia than in India for a long time. But if I'm a VC, I've got a 10-year horizon. And in 10 years' time, things will be different.
Well, I think you gave us quite a few things to think about, and also certain perspectives that we should look from, and then areas that we should focus on. Now, how do my audience find you if they want to hear more of what you have to say, or, read more about the information, etc.? This is time to do your ad.
Well, smoke signals, faxes, stone carvings work, but probably more efficient would be to subscribe to The Information. That's theinformation.com. You can follow me on Twitter. I'm Beijing Scribe. And also now we have we have an app, finally.
Woohoo!
Yeah, The Information, Top 10. You can find us on your app store. It's the top tech stories from The Information sent to you every day. We do our analysis of what you need to know to stay abreast of the top tech topics of our time. So definitely subscribe to The Information's Top Tech Stories, our new app. It's very exciting. And
I saw that, and I thought that was a great idea. Because top 10 videos are like some of the most popular type of videos, most watched on YouTube, top 10 anything. People just want to click in and like find out, what's the best.
Exactly. And there's so much going on, and it's expertly curated. No, so it's the reporters on the beat who will be like, oh, I think this is important. You need to know about this. Also, you can reach me at Shai, SHAI, at theinformation.com. Happy to hear tips, complaints, political rants, manifestos, whatever you got, shoot it my way, whether it's about China, India, Asia, or tech globally. And of course, we're always interested in hearing more from people in the area. If you got a hot tip or something, my DMs are open.
And you can also slip us a DM at Analyse Asia. That is Analyze with a S. And of course, you can find all of our podcast episodes on iTunes Podcast, SoundCloud, Stitcher, Spotify, Himalaya, everywhere. And we've come to the end of this episode. And thank you so much, Shai. It's been such a pleasure talking to you. And hopefully I will be here to talk to you next year and we can see how well you score. I know we didn't have as many, very definite predictions, but I think it'll still be interesting to see how 2020 unfolds. Thank you so much, Shai.
All right. Take care.